Yeah, Peter Atwater, check this out. He's founder of Financial Insights. He's over at William & Mary. He says, it all looks like turducken, where we're just putting one thing inside of another. He's referring to SPACs, which are blank check firms latching onto crypto treasury companies. Bloomberg's Bailey Lipschultz wrote this story. He joins us now. We're going to get to the turducken part of this. I love this.
All right, so this is an interesting video, actually, and I'm going to talk about two different sides. I like it because it covers the two extreme ends of monetization that crypto is experiencing right now in the real world. Ripple is basically one of these two things, or a combination thereof, I think. And the XRP ledger on top of it, you know, or surrounding it, Ripple, and the tentacles reaching out to companies to bring in revenue from different parts of the industry. But I think this video and the interviews kind of highlights like who's failing, who's not, what's the future like, etc. Let's just get into the video. It's actually quite fun.
But just a reminder that SPACs, they were big in the sort of retail trading boom post-COVID, but they weren't new then. I was actually doing some research earlier this week on Jamba Juice, and Jamba Juice's IPO wasn't an IPO, it was a SPAC.
All right, so for those of you who don't know, SPACs are sort of like companies. I believe it's an acronym. I don't actually remember what the acronym actually stands for, but basically it is a blank check company, as they say. It's an empty company that doesn't actually have any reason to exist apart from to make money out of companies that are into something like crypto or something else, right? So they sort of like a venture capitalist company that basically just take money, dump it on a company or project, and buy into a company that has nothing else but just write checks. And hopefully they take that company to the market, as in to float the company, and then they make money out of it. But this guy does a better job than I do.
This was like a thing in the early 2000s.
Decades ago.
Yeah.
Or when SPACs fell out of favor back then because the money would sometimes go missing, and it wasn't really regulated by the SEC that closely. A little bit of a concern if you're supposedly treating it as kind of a bank account that returns T-bills plus anything else. But we did see, to your point, we saw a boom in 2020, we saw a boom in 2021, DraftKings, UTS,
lots of people lost loads of money.
A lot of real companies went public via SPAC. So a lot of people think of SPAC as a bad word or a dirty word, but there are plenty of success stories, but a lot of companies blew up.
Okay.
Which obviously, look at that. Look at that eye contact. Yeah, but there were more companies that didn't blow up. There were more companies that basically died out and people lost loads of money, or investors anyway lost loads of money than those that did blow up. The ones that did probably did spectacularly, but then again, that's just life, yeah?
Brings us to crypto.
Which brings us to crypto and turducken. Turducken is a deboned turkey stuffed with a duck that's stuffed with a chicken.
I didn't realize I would have to
Very
define
American.
Yes, because I needed to look it up. So how does that relate to what we're seeing with crypto and SPACs?
So we've seen at least 9 of these deals. So a SPAC forms, it's a blank check company. They raise money to go out and buy a portion of a private company, take them public. It's a backdoor way of going public. Digital asset treasuries are holding companies that essentially hold crypto tokens, whether that's Bitcoin, whether it's Ether, whether it's a combination. So we've seen a number of SPACs partnering with DATs to then go public. So using the turducken reference, you take some crypto, you put it in a digital treasury company, as you can see. So your chicken goes in the turkey, or your chicken goes in the duck, the SPAC is the turkey, and then you put that in the oven, I think. I don't actually know how these...
Shout out to Americans. How many of you guys had a turducken for Thanksgiving? Let me hear it in the comment section. But this looks really familiar. We have a lot of these setups now, actually, with crypto. You have crypto in the middle, wrapped in some sort of company. I would say Strategy has moved to something like this. They're not exactly a SPAC, but they're a treasury company now, effectively. They buy Bitcoin and hold Bitcoin. And that's where most of their revenue is coming from now. And then whoever then puts money into Strategy is a SPAC, I guess, sort of. So yeah, that would be an example of a modern day setup, turducken of Bitcoin.
things get cooked, but that's really what we've seen. So we've seen Cantor Fitzgerald strike a couple of these. We've seen the group from Cohen, Columbus Circle, striking one of them as well.
It's all well and good, and by the way, maybe we'll have a tofurkey for the vegetarians out there. Tofurkey turducken, I don't know if they do that. But it's been all well and good when the price of these digital assets have been going higher. But Bitcoin down about 30% from its all-time high back in October. If the outlook is sort of unsteady, do we see a kind of a move away from these?
Well, we will see at least two of them cross the finish lines in the coming weeks. So that Cantor deal with 21, their deal votes on December 3rd, as is the Columbus Circle partnership with Pomp's ProCap. So those should cross the finish line when we see them trading. The question is for the others that are waiting to get that approval, what happens there and how do investors receive them? Because when you look back throughout the summer, we saw companies striking reverse mergers. We saw these SPAC deals being announced. That was back when MicroStrategy traded north of 2 times its net asset value. Now it's closer to 1.2. So it's falling out of favor. And the big thing when you talk to investors is you can view DATs really as a marketing tool. So
That's actually quite true. I've noticed that too. On social media, I follow Michael Saylor and Strategy. And I remember they used to be, or he used to be, and his company, the champion of Bitcoin, the most bullish person, the most bullish sort of entity in Bitcoin. They and Grayscale to an extent. But, you know, Michael Saylor was the ultimate diamond hand preacher, evangelist of Bitcoin. And everything it did, he couldn't do any wrong, you know, from the point of view of Bitcoin and crypto holders. I've noticed now since the ETFs started, so now that we have bigger boys in town, BlackRock and all that sort of stuff, they've taken away a little bit from his shine, and also countries getting it into Bitcoin and crypto have taken away a little bit from, you know, Strategy and Michael Saylor's shine in a way. So much so that some people are even sort of rooting against him now. Like every time Bitcoin sort of goes down a little bit and his dollar cost average gets approached or it becomes, you know, negative, people start talking about margin calls. Oh, he's got to sell to pay Strategy investors, blah, blah, blah. And he gets all this negative rep now. It's like a negative energy that's descended on Michael Saylor because of the price of Bitcoin. Now, again, like this gentleman has said, if the price of Bitcoin were to go back to all-time highs, obviously that sentiment will improve somewhat. It just goes to show you how fickle and emotional investors are, especially retail investors. But of course, institutional investors are a little bit more diamond-handed and less emotional. So I will leave actually a link to this video so you can watch the whole thing slowly at your own time. I'm just going to skip ahead to the bit where where the opposite of this is true. We're going to go into DeFi. And what's happening in DeFi is that instead of, you know, these random empty check companies or blank check companies latching onto a certain crypto wrapped company and they try to IPO those guys, we're now talking about DeFi based setups where companies seek out real life businesses, create real life utility that then use the blockchain and DeFi as a rail to sit on, to utilize that. And that, of course, is a little bit more sustainable in that it doesn't matter if we're in a bull or bear market, that company that is making money in real life, that is unrelated to not necessarily the price of Bitcoin. So in the SPAC side, the price of Bitcoin, the price of the underlying crypto directly affects the value of the company and how much money they're making. They're just holding, hoping for the best, right? On the other end, we have a real life functioning company who doesn't depend on the price of the utility token, but are leveraging the utility token to fulfill that business in the real life. I think you understand what I'm trying to say. So Ripple is sort of on this side of the fence, I think, with XRP and the XRP ledger, but there are others. In fact, there is a company that is doing like a mini version of what Ripple is doing using the Hyperliquid blockchain.
MedTech, and in July pivoted to becoming a digital asset treasury for its Hype coin. Was that move right at the right time?
We absolutely believe so.
Why?
And Well, we took a company that had an operating business that wasn't very successful, and we developed an entirely new strategy and pivoted into DeFi monetization. And DeFi, decentralized finance, which was really big news in 2021, has even greater tailwinds now because look at the institutions and the technology companies like Robinhood, JP Morgan, Franklin Templeton, all coming into the new frontier.
Yep.
And our objective with Hyperion DeFi is to build infrastructure that all of these companies will eventually utilize for their financial systems.
Doesn't it sound like he's talking about the XRP ledger? I was listening to this. I'm thinking, I wonder how much inspiration that this company took away from Ripple. Now, of course, the XRP ledger isn't DeFi; it's just infrastructure. On top of it, now we're getting, the DeFi protocols come onto it now, especially with the side chains and the third parties that are now implementing DeFi utility on the XRP ledger. And you can think of those companies as something similar to this Hyperion DeFi company. So, you have Flare, you have companies popping up all over the place, and we're going to see more and more of those guys who are going to pop up, create a business in real life, and then utilize the XRP ledger as the on-chain rail on top of which to sit to leverage that facility. And this person and his company are using the hyperliquid blockchain and its DeFi capabilities for this very purpose. And I think that is reflected in the recent price of Hype with the massive shorts liquidations that we saw. I'll show you that in a minute.
How concerning is the, not lack of interest, but the declines that we're seeing in digital asset treasury companies overall? They were having their moment over the summer, and since then it's kind of been fading. Michael Saylor's strategy, we've seen its MNAV decline and get closer to parity. It's not quite there yet, but it's certainly been an unwinding of these leveraged bets on a lot of these companies.
Yeah, and it's totally understandable. I think over the summer there was a lot of euphoria and excitement about public companies raising a lot of capital to purchase digital assets. And I think that a lot of them purchased at a time when there was a lot of exuberance, and now there is a pullback. People are taking profits, and these companies are left with the question of how do we actually generate revenue? And the way that Hyperion DeFi has differentiated itself is that over the past 6 months, we've built 4 or 5 different revenue lines that are entirely generating revenue on chain.
Right. So
shares
those
down
are
about 75% since July at this point. So you have to convince investors that there is still value in this. What's the message to them that that you're seeing that they're not seeing right now?
I would say that we're pretty much 5 or 6 months into this, right? And DeFi as an industry, as a sector, still has so much growth available. And we firmly believe that Hyperliquid, as the blockchain that supports all the financial systems, is generating the most revenue on-chain today. It's doing 30% of on-chain blockchain revenue. And Hyperion DeFi, as an operating company building products directly on-chain, we are able to scale with the growth of Hyperliquid. And almost infinitely scalable businesses are where the most value can be created.
Okay, so it says a lot more after this, by the way. Link in description to listen to this video in your own time. But I thought that was quite interesting to showcase sort of the two ends of the spectrum of how companies are coming into crypto and which ones are more sustainable. Why it might seem that the earlier ones, we're talking about the SPACs, might seem to make big home runs when they do happen, but they're also subject to the fluctuations and the price of Bitcoin and crypto. Whereas the other end, these Hyperion DeFi types, might have a slower start, might not be so immediately attractive to many. It might take a little bit more work, but they're building a more sustainable long-term project. And I think that's what Ripple is doing with the XRP ledger, albeit in a completely different paradigm and at a much larger scale. Not financial advice, do your own research. I'll see you in the next one. Peace.